the sound of a heavy mechanical grandfather clock ticking in an empty room. The tick is slow, resonant, and deliberate. Beneath it, a low, ominous cello note swells, building a tension that feels cold and architectural. The visual on screen is pitch black, then a sudden, sharp striking of a match illuminates a sharp jawline, a plume of thick cigar smoke, and eyes that have stared into the abyss of the tape for 40 years. The smoke drifts across the screen, revealing a rain-slicked Wall Street alleyway at midnight. The year is timeless, but the feeling is ancient. They look at the charts, and they see geometry. They see clean, straight lines drawn with the precision of an architect. They call it support. They call it resistance. They look at a line on a piece of paper or a glowing screen, and they believe they have found a floor to catch their fall, or a ceiling to limit their ascent. What tragic, beautiful ignorance. The cello drops out, leaving only the cold, mechanical ticking of the clock. The camera slowly zooms in on a vintage stock ticker machine, its glass dome catching the dim light, spitting out a ribbon of paper tape that spills onto a Persian rug like a dying serpent. They think the market remembers a price. They believe the numbers 100, 50, or 150 possess some mystical, inherent gravity. But the tape has no memory. The tape has no conscience. The tape does not care about your lines, your colored indicators, or the desperate drawings you place upon its face to keep yourself from drowning. Look closer at those lines. Look past the ink. Look past the pixels. What do you actually see? You are not looking at a level. You are looking at a battleground of human flesh and blood. You are looking at the exact coordinates where thousands of men surrendered to their terror, or where greed blinded them so completely that they marched willingly into their own execution. Support is not a price level where buyers miraculously appear. Support is the graveyard of short sellers who are finally driven to their knees, begging to buy back what they sold before ruin takes their homes. Resistance is not a mathematical barrier. It is the breaking point of the hopeful, the precise moment where the last optimist realizes he has been lied to, and his hands, trembling with fear, throw his shares into the open air at any price he can get. A sudden booming low frequency, explosion of sound, a cinematic sub-bass drop. The visual cuts rapidly through archival footage of chaotic trading floors, frantic hands, eyes wide with panic, and finally a slow-motion shot of a single drop of ink falling into water, swirling into darkness. I spent 40 years sitting in silence, listening to the whisper of the ticker tape. I made millions, and I lost millions. I have been the king of the world, and I have broken bread with bankruptcy. And in that long, lonely journey, I learned a truth that no textbook will ever teach you. The market is not made of numbers. It is made of human nature, and human nature does not change. It is the one permanent, unshakable constant in the universe. I tested 10,000 levels, not with software, not with algorithms. I tested them with my own capital. I tested them with my own blood, my own sanity, and the cold, hard weight of millions of dollars pushed into the vortex. And tonight, I am going to tell you what is actually happening behind those lines. I am going to strip away the illusion of technical analysis and show you the raw, bleeding psychology that drives the tape. Sit back, turn off the noise of the world, and let me show. How do you see the market not as it appears, but as it truly is? The music transitions into an unsettling ambient drone, the sound of rain outside a heavy window pane. On screen, a lone trader sits in a dark room, the harsh white light of a monitor reflecting off his tired, strained face. The camera captures the reflection of complex, chaotic charts in his pupils, hundreds of lines crisscrossing until the price action is buried beneath them. Why does the modern speculator fail? Why does he find himself trapped in a perpetual cycle of hope and heartbreak? It is because he suffers from the oldest disease on Wall Street, the desire for certainty in an uncertain world. The human mind is a beautiful, fragile thing. It cannot tolerate chaos. It cannot sleep at night knowing that the future is an unwritten void. And so, to protect itself from the agony of the unknown, it creates illusions. The trader looks at a chart that is wild, feral, and unpredictable, and he begins to draw. He draws a horizontal line across the screen where the price turned around twice before. He breathes a sigh of relief. He thinks to himself, There is a floor. If the price comes back to this line, it will ounce. The line will save me. A soft, cynical chuckle breaks through the narration. The sound of a pen scratching aggressively on paper, then tearing. What an exquisite delusion. He believes the line possesses an independent existence. He treats support like a physical concrete wall and resistance like a steel roof. He forgets that the line only exists because he drew it. He forgets that the market does not see his chart. The market does not know his name, and it does not care about his mortgage, his dreams, or his technical setup. Let me tell you what happens in the soul of that trader when the price approaches his cherished level. The price begins to drop. It falls from $120 to $115 to $110. The trader's heart begins to beat faster. His palms grow cold and damp. He looks at his support line at $105. He tells himself, the line will hold. It held in January. It held in March. It must hold now. This is the birth of the most dangerous emotion in speculation, hope. Hope is the great destroyer of capital. In any other walk of life, hope is a virtue. It is the fuel of saints, heroes, and innovators. But in the marketplace, hope is a deadly poison. When the price hits $105, the trader does not see reality anymore. He is blind. He is praying to the line. He is looking for any sign, any tiny tick upward, to validate his belief that his drawing is correct. And then, the tape does what the tape always does. It obeys no matter. A massive sell order hits the floor. The price doesn't just touch $105, it cuts through it like a razor through silk. $104, $103, $101. The music stops instantly. Complete, dead silence. On screen, the trader's face drops into complete shadow. The monitor reflects a bright red downward vertical line. In that single moment, the trader's world collapses. The illusion of certainty is shattered. The line that was supposed to protect him has betrayed him. And now, another emotion takes the driver's seat. Fear. But it is not the fear that saves you, it is the fear that paralyzes you. He does not cut his loss. He cannot. To cut the loss would mean admitting he was wrong, and the human ego would rather lose its fortune than its pride. He holds on. He watches the price sink to $95, $90. He says, it's too late to sell now. It's gone too far. I'll just wait for it to bounce back to my line, and then I'll get out even. He is no longer a speculato. He has become an involuntary investor. He is a hostage to his own psychological weakness. He is waiting for a miracle, and Wall Street is a place where miracles are manufactured only to be sold to the naive at a premium before being crushed into dust. The problem is not the level. The problem is that the trader thinks the level is a rule. It is not a rule. It is a mirror. It reflects his own greed, his own fear, and his own desperate need to be right. Until you understand that the line is not a physical force, but a psychological trigger point for the masses, you will continue to be the sheep that the lions feed upon at the turns of the market. The sound of a distant train whistle, low and mournful. The visual shifts to a black and white cinematic sequence. A grand, opulent hotel lobby in New York, circa 1907. Men in top hats and wool coats stand in small, hushed circles, staring at newspapers with grim expressions. The air is heavy with panic. The music is a slow, rhythmic string arrangement, building a sense of historical dread. Let me take you back to a time when the world was burning, and I was forced to look into the very heart of this monster. It was the autumn of 1907. Knickerbocker Trust had collapsed. The financial system of the United States was cracking at the seams. Money had vanished from the streets. You could not borrow a dollar if your life depended on it, even if you offered a mansion as collateral. I was sitting in my office, watching the tape. The market had been falling for months, a relentless, merciless cascade of liquidation. Every stock on the board was being hammered down to prices that senior operators thought were impossible. Companies that had stood for half a century were being valued as if they were bankrupt junk. Everyone was looking for the bottom. Every major banker, every prominent charting operator of the era had drawn their lines. They looked at Union Pacific at $130 and said, "This is rock-solid support. It cannot go lower." They looked at Reading Railroad at $90 and said, the institutions will defend this level with their lives. I watched them buy. I watched the old, wealthy families of New York pour their inheritances into those support levels. They believed their own prestige, combined with the historical significance of those prices, would act as an immovable breakwater against the tide. The sound of a graph machine clacking furiously, like gunfire. The visual cuts to a close-up of a stock ticker glass container, shaking violently as the paper tape pours out at double speed. But the tide did not care about their prestige. I sat there, completely still, chewing on an unlit cigar. I did not look at where the price should stop according to past history. I looked at the tape itself. I looked at the volume. I looked at the speed of the transactions. And what I saw was not a market finding support tie, saw a market finding its executioner. The buyers at those support levels were buying out of hope. They were buying because they thought things were cheap, but cheap can always get cheaper. I realized that those support levels were actually giant traps. The men who bought at $130 were not strong hands. They were weak hands frozen by the magnitude of their previous losses, trying to average down to save themselves. I knew that if those levels broke, the panic would not just continue, it would explode. Because when a level that everyone believes in fails, the psychological shock is so immense that it paralyzes the intellect. I waited. I waited until the price arrived exactly at the gates of their sacred support. The market hesitated. It bounced for a few hours, giving the fools one last taste of hope, enticing more capital into the slaughterhouse. The commentators shouted that the bottom was in. The lines had held. The music builds to a deafening, dissonant crescendo, then drops out completely, replaced by the sound of a heavy iron door slamming shut. Then I struck. I did not buy. I sold. I threw massive blocks of short pressure into the market, right at the moment the support was showing its first sign of fatigue. I did not do it out of malice. I did not do it because I wanted to destroy men. I did it because I respected the truth of the tape more than the theories of men. The support snapped. What followed was not an orderly decline, it was a massacre. The very men who had bought at the support level realized they were trapped. Their brokers called them for margin that did not exist. To save themselves from total bankruptcy, they were forced to sell their holdings at whatever price the market would give them. Their forced selling became the fuel for my short position. The price dropped through their unbreakable floors like a lead weight through empty air. The sixth jewel shows a rain-wet window reflecting the dark skyline of Manhattan, with the shadow of a man standing perfectly still, looking out. The music returns, low, somber, but victorious, a lonely violin melody over a dark ambient pad. That day, I made $1 million in a single afternoon. By the time the panic ran its course, I was the man who had cornered the market, to the point where J.P. Morgan himself sent word begging me to stop shorting to save the nation's economy. They called me the boy plunger. They called me a predator. But I was merely a student of human nature. I did not break the support. The support was already broken because it was built on the fragile foundation of human hope. I simply recognized that when hope turns into terror, the lines on a chart are nothing more than paper walls waiting to be burned. The visual transitions to a beautiful, highly detailed, minimalist animation. A single white line stretches horizontally across a dark gray grid. A small point of light, representing the price, approaches the line from above. The animation shows the line not as a static object, but as a living, breathing entity made of hundreds of tiny glowing particles that sent individual human minds. Let us leave the past behind and walk into the mechanics of the tape. I want you to understand exactly what occurred during those 10,000 levels I tested. I want to give you the anatomy of the illusion. Why does a level appear to work, and why does it ultimately fail? There are three groups of men at any major price level on a chart. If you do not know who they are and what they are feeling, you are the prey. Imagine a level, let us call it $100. The price has dropped to $100 twice before, and both times it surged upward. The technical analyst looks at this and says, this is a strong support zone. Now, let us look behind the curtain at the three groups of human beings who create this phenomenon. The anatomy of a support level. $10 price, decreasing down arrow $100 level group 1. The regretful buyers wished they bought last time Dow out of greed. Dow. The trapped shorts didn't cover before, covering now out of fear. Group 3. The smart money watching the volume, waiting to trap both. What happens when it breaks? Greed turns to terror. Buyers become sellers. Liquidation begins. Group 1 consists of the men who watched the price bounce off $100 the last time, but they failed to buy. They experienced the agony of missing out. For weeks, they have watched the price trade at $110, $115, cursing themselves for their hesitation. They have spent nights thinking, if it ever goes back to $100, I will not miss it again. I will buy with everything I have. Their motivation is greed spiced with regret. Group 2 consists of the short sellers who sold at $105 or $110, expecting the price to break down. They watched it drop to $100, but they did not take their profit. Then they watched it rally back against them. Now, they are sitting on losses or diminished gains. They are telling themselves, if it goes back down to $100, I will cover my short at break-even and get out alive. Their motivation is fear disguised as relief. Group 3 consists of the professional operators, the men like me. We are not looking at the chart. We are looking at Group 1 and Group 2. We know exactly where their orders are resting. Price drops to $100 for the third time. Group 1 buys furiously. Group 2 covers their shorts by buying furiously. This sudden concentration of buying power causes the price to stop falling and bounce. The technical trader points at his screen and rejoices. Look, my support line worked. The chart is accurate. No, you fool. The chart did not work. Two groups of desperate men acted exactly as human psychology dictated they would act. They bought because they were relieved or because they were greedy. The camera angle shifts sharply, looking down from a high perspective at the grid. The white line begins to vibrate, its particles turning from a calm blue to a violent, erratic red. But what happens the fourth time the price approaches $100? Group 1 has already spent their money. They are fully loaded with shares. Group 2 has already covered their shorts. They are out of the market. The pool of natural buyers at $100 has been drained. The market approaches the level again, but this time there is no one left to buy except the retail traders who are buying simply because it is a line. This is where the secret is revealed. Levels. A support level is not a place where buyers are strong. It is a place where supply is temporarily absorbed. Once that supply outweighs the diminishing pool of buyers, the level does not just bend, it snaps. And when it snaps, every single man in Group 1 who bought at $100 because they thought it was safe is suddenly underwater. Yesterday they were filled with hope. Today they are filled with horror. They look at their accounts and see red. They realize that the floor has turned into quicksand. Now, think about the physics of the market. What must a buyer do when he wants to get out of a losing position? He must sell. The very men who created the support by buying at $100 are now forced to become sellers at $99, $98, $98, $97 to protect themselves from total ruin. Their sell orders trigger the stop-loss orders of the technical traders, which triggers more liquidation, creating a chain reaction of panic. The line did not fail because of bad luck. The line failed because its original creators became its destroyers. Support became the catalyst for the crash. The music evolves into a deep, introspective space, the sound of a solitary piano playing a slow, haunting progression in a minor key. The visual returns to the dark study. The narrator is sitting in an armchair, holding an unlit cigar, looking directly into the lens. The lighting is low-key, dramatic, reminiscent of classic film noir. If you want to survive in this game, you must undergo a complete transformation of your intellect. You must stop thinking like a follower and start thinking like a ruler of your own mind. The average man goes to school, obtains a degree, enters a profession, and learns that hard work, logic, and adherence to rules lead to success. He carries that mindset into the market. He reads a book that tells him to buy at support and sell at resistance, and he expects the market to honor those rules like a polite counterparty in a business transaction. He does not understand that the market is not a civilized society. It is a jungle. It is a wild, untamed ecosystem where the rules are written by the powerful to exploit the predictable behavior of the weak. The market rewards you for one thing, and one thing only: seeing reality before the crowd sees it. The narrator leans forward, his eyes catching the sharp rim light. Let me give you a rule that cost me millions of dollars to leave on. The obvious layout is a lie. If a support level is so clean, so clear, so beautifully defined that every retail trader with a free charting account can see it, then that level is no longer a technical structure. It is a marketing campaign. It is an advertisement run by the market to attract liquidity to a specific price point. Why does the market need your liquidity? Because large operators, men who trade in hundreds of thousands of shares or millions of dollars, cannot buy or sell their positions in a single order without moving the price against themselves. If I want to sell 500,000 shares of a stock, I cannot do it when the market is quiet. If I throw that order into empty air, the price will crash 20 points before I am filled, and I will ruin my own average. I need a buyer. I need thousands of buyers. I need a place where men are eager, desperate, and primed to buy from me. And where is that place? It is at a prominent, beautiful, long-standing support level. I wait for the crowd to gather at the line. I wait for them to place their buy orders because their textbooks told them it is a low-risk entry. And when their buy orders are stacked high in the system, I feed them my shares. I sell them everything they want, and more. I fill their pockets with stock while they congratulate themselves on their brilliant technical strategy. And when I am done, when I have transferred the weight of my position onto their frail shoulders, I step back. The buying power is exhausted. The market falls through the level, and those same buyers are forced to sell back to me at a deep discount when I choose to cover my short at the bottom. Do you see the irony? The line did not fail because the technical analysis was wrong. The line worked perfectly for its true purpose. It served as the venue for the transfer of wealth from the ignorant to the informed. You must stop asking, will this level hold? That is the question of a victim. Instead, you must ask, who is trapped at this level? Who is hurting? Where will the men who are wrong be forced to buy or sell to save their lives? Speculation is not the art of predicting where the price will go. It is the art of predicting where human beings will lose their minds. If you can locate the coordinates of maximum psychological pain, you have found the true secret behind support and resistance. The music begins to build again, but this time it isn't an ominous drone, it is an epic, rising orchestral movement. Violins, heavy percussion, and brass rise together, creating a feeling of intense focus, power, and high stakes. The visuals switch rapidly between close-ups of ticking clocks, numbers changing at lightning speed on electronic displays, and old archival footage of tides crashing against rocky cliffs. Look at your charts again. Look at them tonight, after you finish listening to my voice. You will see those lines differently now. You will not see them as cold geometry. You will see them as the pulse of humanity itself. You will see the hope that built them, the greed that sustained them, and the terror that will eventually destroy them. To be a legendary speculator, you do not need a more complex formula. You do not need a faster computer, a better indicator, or a secret algorithm. You need absolute, unshakable control over your own emotions. You need the discipline to stand alone in the dark, watching the crowd rush toward their own destruction, and have the courage to do the exact opposite of what your instincts scream at you to do. When the price arrives at that critical level, and the whole world is shouting that it is safe to buy, you must have the coldness of mind to say, no, show me the tape. You must watch the volume. You must see if the buyers are strong or if they are merely desperate. And if the level breaks, you must not hesitate. You must not pray. You must not look at your line and ask it for mercy. The market has no mercy. You must cut your loss instantly, without a backward glance, without regret, and without pride. You must accept that you were wrong about the timing, but right about your respect for the tape. The orchestral music reaches its absolute peak, a magnificent, thundering wave of sound that captures the entire essence of the struggle between man and the market. The visuals show a massive wave breaking over a lighthouse, the light still shining brightly through the storm. The market is an eternal ocean. It flows up and it flows down. It creates fortunes for those who align themselves with its truth, and it washes away those who try to impose their own rules upon its waters. The lines you draw are nothing more than footprints in the sand at low tide. They are beautiful for a moment, but the tide is coming, and it will wash them away as if they never existed. Stop worshiping the lines. Start understanding the soul of the men who draw them. The orchestra cuts out on a single, final, ringing note that echoes into a vast hall. The screen transitions to absolute black. The slow, rhythmic tick of the grandfather clock returns, echoing in the darkness. Remember, the market never lies. Men do. Speculate accordingly. The sound of a match being blown out. Silence.